Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Kamala Harris says a deal must be done to end the Israel-Hamas war in her first TV interview as Democratic nominee. A new Bloomberg poll shows she's sustaining momentum in battleground states. Israel's army extends its West Bank push, raising international concerns about the spread of violence. And the Democratic Republic of Congo prepares for Mpox vaccines to be rolled out. We'll have the latest in our next Africa segment. Well, TGIF, everybody, it's just gone 8 a.m. across the Emirates. I'm Joanna Versace over here in Dubai. What a week it has been for stock markets. With the narrative changing over the course of the week, we walked in on Monday, and of course, the big focus was Jackson Hole, some of the dovishness that came out of Powell. Then attention shifted to NVIDIA earnings. We saw the reaction yesterday, that stock getting a pullback of about 6%, pulling down the NASDAQ. And then, of course, the focus now is going to be on those PCE numbers coming out later today. The expectation is we are going to see a slight moderation to 2.5% year on year. So where does that leave markets right now? You can see the S&P futures inching higher towards the green. Yesterday, we ended moderately lower, but again, very close to all-time highs. The Dow once again making a new record all-time high. NASDAQ yesterday slipping somewhat because of NVIDIA pulling down the index by about 6%, but the index itself ending somewhat weaker. Today, you can see leaning towards the green as well as we head into that all-important PCE data. And then 10-year yields slipping a little bit higher, actually. Yields, we had a somewhat of a soft seven-year auction, and on the back of that, we saw 10-year yields move upwards to the tune of about 4 basis points. And then gold also in focus, namely because we have had a very strong month for gold, up 4% over the course of the last 4 weeks. Today, again, coming off a little bit, but the theme has been one of money looking for a safe haven, and it's been going into gold. So let's just take a look back at the month as a whole. It's been pretty positive for bonds, for equities, for commodities, as you can see from those bars right at the end, the white, the blue, and the yellow. But there's one asset class that did not do well, and that is specifically the U.S. dollar. So you can see that purple column is indicating that the dollar had a very weak month, and actually its second weakest month in a row. So a lot of downward pressure being put on the USD here that is having ramifications across all of these currency pairs around the world. We've talked a lot about the price action in yen over the course of the last month, but of course it is showing up against USD, against the euro, and against the pound as well. So weakness in USD has been the theme over the last month. All right, let's push on and check in on how markets in Asia are faring as well. Avril Hong is in our Singapore studio standing by. And Avril, just give us an overview of what you've been looking at this morning.
Well, on top of the yen, which, as you say, has been influenced by what we're seeing in the greenback, we are also closely tracking what we got out of China. In terms of the earnings scorecard, we did see a bit of a positive sentiment coming through from the insurance names, but in the past hour, a Bloomberg scoop that Chinese authorities are mulling letting home buyers switch banks to cheaper loans. And this is a way that could help the refinancing of about $5.4 trillion in mortgages and go on to have perhaps knock-on effects on the consumption picture. Certainly, we are seeing going into the lunch break, the CSI 300 outperforming compared to the rest of the region. But of course, we're seeing that green on the screen thanks to what we got from the U.S. economy out overnight, that upward revision of GDP, showing us how the economy is still buoyant with the consumer picture in the U.S. So we saw a bit of a reversal from the declines of yesterday. Joanna.
Avril, thank you so much. That was Avril Hong in Singapore. Now, on to one of our top stories from overnight. A U.S. Democratic presidential nominee, Kamala Harris, has pledged to address economic woes and bolster the middle class in her first TV interview since the DNC. She also called for a peace deal in the Middle East to end the Israel and Hamas war.
We have got to get a deal done. We were in Doha. We have to get a deal done. This war must end.
In the meantime,
and we must get a deal that is about getting the hostages out. I've met with the families of the American hostages. Let's get the hostages out. Let's get the ceasefire done.
All right, that was VP Kamala Harris talking about the urgency to get a ceasefire deal done in the Middle East. But of course, she discussed many other topics. Let's bring in News Desk editor Jill Desus, who joins us for more. So maybe just let's start with some of the highlights from that interview. Her first interview, of course, it was a joint interview with her running mate. What did we learn?
Well, Jumana, I think you heard a little bit there on Mideast policy sounding very consistent with what the Biden administration, of which, of course, she's already vice president of, has already laid out. So she's saying, you know, Israel has a right to defend itself, had a right to defend itself in the wake of the October 7th attacks last year. But she does acknowledge, obviously, that she's saying there's been far too many Palestinian victims in this conflict, you know, obviously laying out the fact that they want to continue to pursue the ceasefire deal. So at least when you're looking at foreign policy there, you know, there's been a lot of questioning over, you know, how much Kamala Harris is just going to track with what President Joe Biden has already been laying out. I think that we get some inkling there that that's kind of sounding like a lot of the same. You know, at this point, look, Jumana, this is really Kamala Harris's first big appearance, you know, publicly kind of introducing herself in the form of a TV interview where she's actually asked some of these questions rather than in the form of her acceptance speech at the DNC the other week or, you know, in the form of some of these speeches. So it did give, you know, it did give her a chance to sort of drill down on some of these policy positions. How much we actually got, not a ton of new detail, but you did start to see her lay out some of that groundwork there for what a Kamala Harris presidency may look like should she win in November.
And the debate with former President Trump is set to happen on September the 10th. How did the interview yesterday position her for that upcoming debate versus Trump? Did we get an idea of how she is going to go on the attack versus him?
Well, we'll have to see what ultimately happens at that debate, Jumana. But I think at this point, you know, one thing to kind of point out, which I believe CNN pointed out at the top of the interview, is that she's actually never really met Donald Trump in person. So this debate on the, you know, conceivably on the 10th of September is actually going to be the first time these two candidates meet in the same room face to face. I think that kind of presents a really interesting dynamic there. What Kamala Harris would ultimately need, though, is to figure out how to, you know, articulate more of her policy positions. She's been criticized a bit about, you know, vagueness of some of the policies positions that she may hold. We'll see if she goes into any further detail during that debate. But then it's also a matter of how exactly she stacks up and sort of counters Donald Trump. Obviously, you know, this is coming. This is the first debate since Joe Biden was the candidate for president. And we saw that absolutely disastrous debate performance that resulted in him, you know, leaving the ticket. So I think there's a lot of anticipation for this debate, just as there was for this interview. We'll have to see how she handles that.
Yeah, and we're keeping a close eye on these polling numbers. The latest polls are actually showing she's gaining an advantage in some key states. I guess the question here is, can she keep this momentum going?
Yeah, I think what we've seen, you know, off the back of some of these polls off the back of the DNC convention where she was formally nominated is that she actually has about a percentage point advantage in a lot of major states. She's polling better than Joe Biden was when he was at the top of the ticket. It seems that voters, at least so far, are willing to forgive her, like give her a little bit more leeway on economic issues in particular, which Donald Trump has generally been stronger about. So we'll see if that actually builds a little bit further. But really, I think that, you know, that September 10th debate time is going to be really critical for seeing how exactly she stacks up against Donald Trump and whether or not she can move the needle there.
Yeah, absolutely. Jill, as ever, thank you so much for the overview. That was News Desk editor Jill Desus. Well, switching over to the region, Israel's army says it killed 5 gunmen at their hideout in a West Bank mosque as it continues a major military incursion into the Palestinian territory. The campaign, involving hundreds of troops, is raising global concern about the spread of violence coming in parallel with the war on Gaza. So for more on this, let's bring in Paul Wallace, who leads our MENA economy and government coverage. Paul, yesterday we were talking about the picking up of violence within the West Bank. It seems as though there's been no abatement overnight. There continues to be further violence. Walk us through the developments in the last 24 hours.
Hi, Joanna. Yes, you're right. The clashes stemming from the IDF's raids into the northern part, or some of the northern parts of the West Bank, continue. This is a major Israeli operation. By some according to some analysts, it's the biggest IDF operation in the West Bank since the Second Intifada. So you're talking about the biggest in about 2 decades or so. These moves by the Israeli forces will presumably continue for several more days. There has been some condemnation of Israel for this in the West. The EU in particular, the EU said it's worried that these operations amount to the extension of the war in Gaza to the West Bank, which is something that they say they're very concerned about. The US has been very muted. It hasn't said much. It did sanction some settler groups the day before last, and the timing was interesting, coming just after the IDF operation started in the West Bank. But so far it hasn't backed or condemned what's going on.
Another big piece of news that came out yesterday from the World Health Organization saying that they had come to an agreement with Israel to allow for a brief cessation of fighting, to allow for polio vaccinations to begin within the Gaza Strip. Just talk us through what's going on there.
Exactly. The backstory is that Gaza has started to see its first polio cases in a long time, which is obviously something that is concerning health officials in the region. So the UN says that Israel has agreed to a brief pause in fighting in some areas so that the UN can start to administer vaccines on children to stop the polio spreading anymore. It is quite confusing, however, because just over a day ago, Israel denied reports that it was going to pause fighting, but now it seems as if there will be a certain pause, but it's unclear where exactly and just how extensive it is. The backstory to that is that Israel, or at least Benjamin Netanyahu's government, seems very wary of anything that looks like a ceasefire or pause to his domestic audience, and particularly to the far-right members of his cabinet. For Netanyahu, it almost plays into his hands politically to show that the war is continuing, and any sign that there's a stop before Hamas is destroyed can hurt him politically. But it definitely seems as if there will be a pause, at least in some areas of the Strip, to get these vaccinations going.
Yeah, with the first proven case of a baby getting polio within the Gaza Strip, it is certainly very important from a humanitarian perspective. Paul Wallace, thank you very much. Well, still ahead, hear why Shuaa Capital says a Fed cut of 50 basis points in September will actually spook markets. More on their investment strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Asian stocks are closing in on a 4th month of gains, lifted by hopes of a soft landing for the U.S. economy and the prospect of lower interest rates. Let's discuss more with Aarthi, Chandrasekaran, Asset Management Head at Shuaa Capital. Aarthi, it's great to have you with us. It has been quite the week for markets. Lots of information to digest for all of these stock markets. Maybe let's just start with yesterday's new information, which is that U.S. GDP got revised upwards. You had these personal consumption numbers also revised upwards. And yet, here we are talking about the prospect of a September rate cut. Should the Fed be cutting?
Of course, the Fed should be cutting, but we are anticipating a 25 basis points of cut in September, maybe another one in December. But market is getting ahead of itself. It's factoring in like close to about 100 basis of cuts this year. Some of the market participants are looking at 50. But you cannot have a Fed. Fed is unlikely to do it unless you have a terrible job report.
Right.
Or you have a very strong disinflationary report, or something really has to happen between now and next month that the economy actually falls apart. And Fed is data dependent. They're not forward looking.
Yeah.
And it's very unlikely for them to go and massage a 50 basis point of messaging. They're going to say something like, we know something that you don't, and that's going to spook the markets.
It will spook the markets. What is your steer on the U.S. economy here? They're piecing it all together. How bad is the situation on the ground? Because, again, you are getting, okay, albeit GDP tends to be backward-looking, and still growing at 3%.
It is backward looking, and consumption has been extremely strong. That's been the key engine of growth driver as far as the U.S. economy is concerned. There's only one data point which is pointing towards recession, Janana, is basically the labor market, which is actually...
But even that, it's an unemployment rate of 4.1%.
And jobs are vanishing.
But you still got job creation of 180,000. I don't see the recessionary signals.
At least not now, because the consumers are not falling apart. Consumers are like very healthy, and you have the retail sales, which is still coming in at 3%. But the bigger question, can this actually keep going on? Industrial production is weak. Housing data is weak. It's falling off the cliff in terms of the mortgage application rates. You can say it's a factor of rates as well, because housing market rates are very high. But then the retail sales, how long can it go? You have a substantial decline in the savings rate in the last data point, which has kind of offset the retail sales. And that's probably why the retail sales is still going on. Wage growth is declining, no doubt about it. We're entering into a territory of a soft landing. As of now, it's a soft landing, but recessions are always non-linear. A hard landing is where it starts. I mean, soft landing is where it starts before it ends up into a hard landing territory.
But you stick with the view that we're going to get 50 basis points of cuts this year, not 100, which what the market is pricing. So the market could be disappointed. And yet, if you rewind back to December of last year, remember, the market was pricing in 5, 6 rate cuts by the end of this year. We're probably going to get 2, maybe 3, 4 if the market is right, but still less than what we priced in last year. And yet, S&P is close to the all-time highs. The Dow is at the all-time highs. Stock markets don't care.
They don't actually. Market valuations are extremely high, and we're sitting in a very fragile background as far as the stock market is concerned. The two markets, rates is talking about a probability of a higher recession. Currencies, dollar is talking about a higher rate cuts and aggressive rate cuts. But then you have an equity market which is actually factoring a picture perfect soft landing scenario. Now, one of them has to be right. You can't have all of them being right? So as we speak, I mean, on equity markets also, we are on the multi-asset strategy. We prefer bonds over equities for the same reason. Because of very high valuations.
We were taking a look back at some of the cross-asset performance last month. Another weak month for the dollar. Its second weak month in a row. It feels as though there is some significant downward pressure being exerted on the USD. Does this continue, do you think?
I don't think so. I think the pressure on dollar is overdone because of the aggressive rate cuts expectations by the Fed, right? But in the near term, as and when you come closer to the FOMC and Fed actually delivers a 25 basis point of cut and not 50, I think some of the weakness could get reversed. And let's not forget, you have a U.S. election, which is dollar positive. Your trade and the tariff policies are USD positive again. And then you have an yield advantage, even if you were to factor in 3 rate cuts by the Fed between now and January. It's still a yield advantage compared to the G10 economies. You still have an economic growth of U.S. which is moderating, but not as bad as economic growth in Eurozone, China, or Japan, which is fragile and weak. So from a dollar perspective, growth, inflation, and carry perspective, I think dollar still ranks number 1 in my view.
And very quickly, what do you sell against it?
It's a very tough call, but then as of now, I would say euro or pound maybe.
Yeah, because we're getting to some of the highs there as well. Aarthi, always a pleasure. Great to have you with us on this Friday. Aarthi Chandrasekaran of Shuaa Capital, thank you so much. Well, also coming up, Intel calls in investment bankers to help plot a path through the most difficult period in its 56-year history. We'll have those details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Intel is said to be exploring options to cope with its historic slump. According to Bloomberg sources, the company is working with investment bankers to help navigate the most difficult period in its 56-year history. Bloomberg intelligence analyst Robert Lee joins me right now. Well, for most of this year, we've been talking about how Intel had missed out on the broader chip rally for a multitude of reasons, and it seems as though the company has identified that and they're trying to do something about it. What do we know about what they're looking to do to restructure?
Okay, well, a little bit earlier, they announced they were looking to reduce their headcount by around 15% or so this year. So that plan is confirmed and remains in place. Just for a couple of numbers at you, one of the 2 challenges that Intel has is obviously it's a very cost-heavy business. it follows what's called an IDM, or integrated device manufacturing model. In other words, they try to do everything. They design the chips, they fabricate them, they package them, they do the whole lot. Whereas other companies sort of focus on one element of the value chain. But that means that they carry a lot of costs. So to look at the year-end headcount numbers from last year, Intel's got close to 125,000 employees, whereas TSMC, in comparison, although it has a slightly different business model, has 76,000. NVIDIA's got 26,000. So the combined headcount total of TSMC and NVIDIA is still less than Intel's. So Intel's carrying a lot of costs, and therefore they've been looking to restructure. Today's news, or unconfirmed, is that they're potentially looking to spin off their loss-making foundry business. And again, with the challenges on the growth front they have, particularly given their growth is tied to the PC market, trying to reduce the costs and improve the financial performance is obviously what they're trying to do internally, and obviously trying to regain some confidence on the investor front as well, given the weaker share price performance.
Yeah, and the thing about the foundry business is it is a business that requires scale. It's a lower margin business than the design a business, which is obviously a lot higher margin, which is where some of its competitors are powering on. To what extent can Intel actually compete with the likes of some of that more cutting-edge technology, given that that seems to be where their focus wants to be in the future?
Right, there's a very long history, a long story to this. I'll try and keep it as brief as I can. Intel, for many years, was the technology leader in the market. It operated at more advanced process nodes than TSMC. TSMC, in recent years, has caught them up and overtaken. So Intel's lost the technology leadership. That's one point. A second point is, I think, if we look back 20 years or so ago, the foundry market and the fabrication side of chip making were seen as relatively lower value add. But as it's become increasingly difficult to fabricate these chips at the bleeding edge, more and more of the value has transferred to the likes of TSMC, and TSMC effectively is, well, got the market to itself. It's the world's dominant foundry company, and also a technology leader. So Intel has lost out on those fronts. It's tried to grow its foundry business in recent years, but as I said, it's loss-making, and it's incredibly hard and a very difficult task with huge technological barriers to overcome in order to compete directly with TSMC, which, as I said, has successfully extended its lead over the course of 15 or 20 years or so. So Intel's fundamental problem is it's carrying a lot of cost. Yeah. Its growth is very much tied to the PC market, which is ex-growth, and it's lost its technology leadership to TSMC. So it's got multiple challenges. It's looking for new growth drivers, and so far those haven't come through, and therefore restructuring is one option open to them.
Yeah. Bloomberg intelligence analyst Robert Lee, thank you so much for bringing us the latest on Intel. Well, coming up, stocks in Asia are ending the week on a high, with shares in China leading today's advance. Our next guest says 3Q earnings will reinforce a soft economy. This is Horizons Middle East and Africa, our top stories this morning. Kamala Harris says a deal must be done to end the Israel-Hamas war in her first TV interview as Democratic nominee. A new Bloomberg poll shows she is sustaining momentum in battleground states. Israel's army extends its West Bank push, raising international concerns about the spread of violence. And the Democratic Republic of Congo prepares for Mpox vaccines to be rolled out. We'll have the latest in our next Africa segment. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersachi in Dubai, getting you caught up to speed on some of these markets as we head into the last trading day of the week. What a week it has been. Indeed, a lot to digest for market participants between that dovish-Jackson Hole on Monday, NVIDIA earnings Wednesday, yesterday's strong upward revisions for U.S. GDP and personal consumption data, and then today looking ahead to PCE. The expectation is we are going to see a slight moderation year-on-year to 2.5%, monthly 0.2% higher. higher. So let's see how the markets digest that. Today you can see the futures leaning towards the green. The Dow made an all-time record high yesterday. The S&P is very close to it. Nasdaq did not because it was pulled down by Nvidia, which ended the session down 6% lower. U.S. Treasuries 3.86. We ended the session 4 basis points higher yesterday on a softish 7-year auction. And then gold, interesting, today coming off a little bit, but up 4% for the month of August. A very strong performance for the safe metal there, for the safe haven metal there. But switching on, let's just talk about broader asset allocation, because it's been quite broadly speaking, a better month for commodities, for fixed income, and for equities, as you can see from the bars right at the end there, but not a good month for the USD. You can see the dollar index is down for its second month in a row. Actually, this is the worst month of the year for the US dollar. This as markets started to price in a more dovish trajectory out of the Fed. 100 basis points of cuts priced in between now and the end of the year. That is weighed on the USD. But let's check in on how markets in Asia are faring as well. Avril Hong is in our Singapore studio. Avril.
Yeah, Jumana, we're seeing Asia stocks in a pretty good mood, ending Friday potentially on the front foot, where we're seeing those gains across the region. We are in a stage where good news for the economy is good news for stocks, especially after the upward revision to US GDP. But I also wanted to highlight what we're seeing on these Chinese equities. Yes, we did get a boost from the insurers thanks to strong earnings, but something we're also going to be keeping a close watch on when trading resumes in the next hour on the mainland is whether there's a reaction to that Bloomberg scoop earlier on in the hour. I told you about how China authorities might be mulling the refinancing of about $5.4 trillion in mortgages. And just to add a dose of skepticism, even though we're seeing the CSI 300 maybe going into the end of the trading month, today gains of 2%. This is something similar we saw in June and July. They ended the months with gains, but they're still well past their May peaks. And today as well, we're seeing the ETFs that the Chinese national team favors seeing about gains of 2%. So something to keep in mind even as we see these gains in Chinese markets. The offshore yuan, meantime, is gaining ground to the strongest level against the USD since June last year. Jumana.
Avril, thank you so much. Seems that risk on is prevailing overnight. Well, we are 80% of the way through China's earnings season, with over half of the stocks on the MSCI missing estimates and disappointing investors. Very happy to say that Ing-Sin Yao, the investment director at Aberdeen, joins us right now. Great to have you with us. It feels as though a lot of negative signals are coming through, both at a micro level, when you talk about the earnings and how many companies have disappointed this week, and at a macro level with some of the data disappointing to the downside as well. Just paint the picture for us.
Yeah, so, I mean, our position on China is that the economy is going to be weak, structurally weak. The third quarter, all the data we're seeing thus far remains as weak as second quarter, so we're not optimistic. I would say from a broad perspective, there are some slightly more positive in the sense that I think a lot of the weakness in the economies and has really sunk in. Investors are now more aware that the government, the central government especially, is unlikely to put up a very big stimulus to support the economy. Some moderate incremental positives are like the hope for US-China breakthrough in terms of relationship. Declining US dollars is actually positive for China and a lot of other emerging economies. So some incrementals there. I would say the economy will be weak. It allows investors to focus on fundamental.
So I think the main question here is, have we reached a bottom? Has the data actually bottomed out, or is there scope for things to still continue getting worse in the coming months?
I suspect the quarter will remain weak. On a year-on-year basis, you do have a benefit where last year, third quarter, had a couple of typhoons, which is really tough for the economy in certain pockets of it. But I think the economy as a whole is really weak. The key pockets in consumer property investments remains very weak. We don't expect that to turn. In terms of infrastructure spending from the government, we're still trying to wait and see. But the state and city governments are, from our understanding, don't have the money to do too much to support the economy. So you really need the central government to step in. And that's why I just don't think they are ready to
Yeah, where do you actually see the real GDP number coming in then? Because this 5% is the reported number. Many other investment houses, including the likes of UBS, yesterday downgrading their view of where they see the Chinese economy, forecasting 4% growth for 2025. Where do you think the real growth number lies right now?
I don't have a forecast for that. It is tough. I mean, from our perspective, we take a bottom-up view. And across the board, when we speak to companies, the mood is generally more bearish. So it's not easy to corroborate to that 5% growth, which, if true, would have been quite steady in a sense. So our view is that the economy, the real economy, is probably a bit weaker than that. I don't have a real number for you. So we take the view from the bottom up, and we think it's weaker than that.
Yeah. Are there any parts of the Chinese markets that you would want to be invested in now? I was just looking at, again, the report card from the earnings season, and utilities have done relatively well compared to other sectors. Do you think that continues? Is it a part of the Chinese economy that you would want to get exposure to?
Yeah, I think taking a step back, I think the dominating theme in China remains for the defensive. And by that, I think the focus will remain on companies with great cash flow that can pay you and do a lot of share buyback. I think irrespective of sector, I think that's the dominating theme. And I think that will continue for as long as the outlook on the economy remains a bit soft. So that's our stance. There are pockets of growth, tends to be more export-oriented. For example, like EV battery, like CATL continues to grow well, but I think it's kind of limited. For us, the base has to be that the company, from a stock specific perspective, have very strong cash flow and have yield and buybacks to back the shares.
Yeah, very clear. Insing Yao, Investment Director at Aberdeen, thank you so much for joining us on the show today. Well, also coming up, South African vaccine maker Biovac says it is able to produce Mpox shots, but wants to find out if there is long-term demand. That conversation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Vaccine manufacturers in Africa are gearing up to make Mpox jabs as an outbreak spreads. South Africa's Biovac Institute says it is able to produce the jabs, but the CEO told us that they are waiting for further talks with other companies.
Nobody can run a sustainable business just dealing with outbreaks. And so what's happened with cholera, because the disease was not going away, is that the World Health Organization, Gavi, UNICEF, and others have now come up with a long-term demand forecast. That has made the likes of Biovac now being able to say, okay, cholera is worth it because now, the effort will be much longer. So that's one example. And then I think the audience will be much more familiar with COVID, where for about 2 or 2.5 years, there was sustained demand and a very high demand because of the pandemic. And as we know now, in many parts, COVID vaccine is not in demand. Some of us got into technology transfers at the time. It was with Pfizer, and we're very happy that we did. We're not complaining at all. However, we're not producing the COVID-19 vaccine today. Not because of anything that Biovac has done or Pfizer has done, but it's only because there is no demand. So just using those two examples, I think that's why we want to look at Mpox rather carefully. Whilst we want to respond because there are lives being impacted out there, but I think the sustainability of any tech transfer is quite important to look out for.
So then, what are those conversations like then with some of these health organizations? You mentioned the WHO and others. What are some of the questions that you still are waiting for them to answer, in particular about Mpox, to avoid what we've seen with cholera and COVID, as you were mentioning there?
Yes. So I think the conversation should be that, is the current manufacturer, the two manufacturers of Mpox, do they have sufficient capacity to manufacture for the next coming years? So there's 10 million doses that's been spoken about publicly. And so are those manufacturers able to meet the world's current demand? If they are, then it means that they may not need an African manufacturer. However, if we think that they are either unable or unwilling, then that's where I think the likes of ourselves can come in. But what we would like to understand is that will there be an annual demand of the vaccine? Now, that annual demand can come in two forms. Either there can be an annual demand that says that we'll produce the vaccine, Biovac, and we know the arms that it will go into, and they'll have some preventive program, or produce the vaccine and for stockpiling. Now, if there's a long-term stockpiling effort, and we know that there's a predictable demand from a stockpiling perspective, that can potentially make it more viable. At the moment, none of that has come through, and I know there's a lot of people working through that, but I think certainty of demand would lead to sustainable manufacture and to be able to respond if the outbreak continues further in the next coming years.
Yeah, and I mean, just based on the reporting that we've seen, it seems like public health officials are still trying to figure out just how this virus is transmitting, because it is quite different from what we've seen in the past. So there is a lot of catch-up that is being played right now.
Absolutely, so there's so much that, whilst Mpox has been there, but I think what's been realized is that whilst we think we knew all of how the virus behaves, but the virus, and I think we also learned efforts in COVID, the virus evolves and it teaches us new things. So Mpox has become more transmittable today than it was 2 years ago. It's affecting children now, and it wasn't before. And so with these new clades that are coming through, public health officials are also now, trying to do more research to understand how the virus is behaving. So yeah, whilst we think that we knew enough, but I think we don't know enough because the virus is moving on and we need to play catch up.
Well, that was the Biovac CEO speaking to our Africa correspondent, Jennifer Zabazaja, who joins us now. Jen, with regards to these Mpox vaccines and supporting the production of them, what was the main takeaway? What is Biovac actually waiting for next?
Right, Jumana, it was interesting. I mean, Morena was talking there just a bit about just how this process actually works, but because they are playing catch up really with trying to figure out the transmission and who is being affected differently with this Mpox, there is still a lot that is unknown. They are going based off of publicly available information, is what he told us, and so they need to understand more about what it is that they would need to have in-house in order to help produce these vaccines. But not just that, something that we learned during the COVID pandemic is, of course, vaccines need to be stored in certain climates. And so they still don't even know if they have the facilities available to store some of these vaccines. So still a lot that they're waiting for from Danish company Bavarian Nordic and also a Japanese company that has potential Mpox vaccines.
I mean, is that reassuring? Are they and other Africa vaccine manufacturers actually going to be ready for the next potential outbreak, given some of the hurdles you outlined?
Right. Right, and I mean, that's always the question when outbreaks happen, especially in this part of the world. What is the next outbreak? Because he was telling us these manufacturers, at the end of the day, they do have a business and they need to produce a sustainable business. And so they cannot just react based on outbreaks. And so the African Union in particular has a goal for African manufacturers to be able to produce 60% of vaccines come 2040. When I asked him if Biovac and others are at that point, he said it's unlikely that they'll get there by 2040. They will graduate from where they are now, but they really need to be included in these conversations with global manufacturers and do still need a bit of hand-holding because African manufacturers are still way behind what some of these other bigger vaccine makers are at. And the conversations are about what is disease X, is what he called it. What is the next disease? And what is it that they are going to need financially, but also infrastructure-wise, in order to at least try to keep up with fighting a lot of these diseases, because they sometimes start here, and if we're not able to at least tackle some of the effects of it here on the ground, it's going to become an issue for the global population.
Yeah, Jennifer, very important story. Jennifer Zabazaja, our chief Africa correspondent. Thanks for that. Well, we'll have more on the Mpox outbreak response in our next Africa newsletter and podcast. So make sure you subscribe at Bloomberg.com and wherever you listen to your favorite podcasts. Also coming up, one of the companies at the heart of Abu Dhabi's construction boom sees a boost in sales from foreign buyers, fleeing volatility, currency moves at home. We'll have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersechi in Dubai. Well, Bloomberg has learned the Netherlands plans to limit ASML's ability to repair and maintain its semiconductor equipment for Chinese customers. Sources say the Dutch government will probably not renew some ASML licenses to service and provide spare parts in China that expire at year-end. Withdrawing maintenance support could render chip-making equipment inoperable as soon as next year. Nippon Steel says the Japanese government needs to impose an anti-dumping tariff on Chinese exports to protect the domestic industry. Nippon says the firm is lobbying the government on this issue alongside other steelmakers. It says others, including the U.S., Europe and South Korea, have already done so, leaving Japan vulnerable if it doesn't follow. And Lululemon has trimmed its sales and profit outlook for the year as inflation and increased competition curb demand for its pricey yoga pants. Comparable U.S. store sales fell 3% in the second quarter, missing analyst expectations. Jeffries says fashion is shifting further away from Lulu's core offering, but Wedbush thinks the guidance could cut offer and could give investors a reset. All right, and on to one of our fun stories to end the week with. Abu Dhabi is going through a construction boom, with companies spending billions of dollars to put up new five-star hotels, high-end office towers, and luxury homes. It's part of a push to attract more tourists as well as rich expats to live and work in the UAE. So let's get more with Bloomberg's finance reporter Zainab Fatah. Well, Zainab, we're talking about all of the efforts that Abu Dhabi are doing to attract people to come and live, expats from abroad, in addition to tourists. And a lot of that is focused on cultural destinations as well. I mean, I'm personally going to the Louvre tomorrow, my first time. I'm looking forward to it. There's a Guggenheim Museum opening up. Why are they introducing all of these elements?
Exactly, Jumana. So the most important thing for Abu Dhabi is actually developing the city to project the heft that the UAE is increasingly playing on global political scene and within the financial industry. You see the country is becoming a lot more important internationally, and as a way, it's attracting a lot of firms, and there are a lot of people coming to Abu Dhabi that need schools and homes and offices. So ADGM, the occupancy rate is now around 95%, basically full. They're trying to build a lot more office space now, and of course housing for a lot of the wealthy expats who are choosing to make Abu Dhabi home. That comes with a lot of demand for schools and hospitals and everything else.
Yeah, what would you say are some of the biggest challenges that these Gulf governments are facing?
Well, any government in the Gulf is going to have to deal with a very important challenge of climate change.
Yeah.
These are very hot climates here and that we're dealing with, and it's getting hotter. This region is heating at twice the global average. Wow. So the issue becomes is how do you ensure that you're not adding to the challenge, you're not helping warm the world faster while you build, but at the same time, what's the long-term impact for this region, let's say in 100 years?
Yeah.
It's a big challenge.
Yeah, that it definitely is a big challenge, and you feel it when you walk outside, especially this time of the year. Earlier on in the week, we spoke with Ben Ghati, and he was talking about the very rosy outlook still for the prime real estate market, specifically here in Dubai. Still a lot of demand for luxury. From your conversations with many of the developers that you speak to, what is the sense that you're getting for the outlook for the rest of this year? Can this demand actually keep up?
Most of them are really surprised. They did not expect this recovery to continue and to have legs this much and to go on for this long. And many of them expected this year we're going to see prices and rents start to kind of fall a little bit. Still, by the end of the second quarter, 24% increase in property prices, 19% increase in rental. Those are very high rates. But still, there is a lot of money that's coming into this region. And the currency devaluations, currency volatility.
Where is that money coming from? The latest numbers? Because obviously we know that there was a big influx post the Russian war. Where's the recent number of buyers? Where are they coming from?
So Bengati is one of those people because a lot of demand is coming to developers directly. So there is a lot of buyers who are coming from Turkey and from Egypt. And I heard it from many others that the Turkish investors are coming in droves. And when you look at the currency devaluations of these countries, Turkish lira lost 95% since 2012. And the Egyptian pound lost 68% in the past 2 years. That kind of gives you an idea for those, the idea of why those investors want to put their money into dollar-denominated currency through the real estate. Exactly.
Yeah, because it offers them stable access.
And let's not talk about Lebanon alone. Like, just think of what happened to the currency there.
Yeah. Zainab, as ever, great to chat to you. I am very much looking forward to my tour of the Louvre tomorrow in Abu Dhabi, so I'll have to let all the viewers know on Monday how it was. Bloomberg's finance reporter, Zainab Fatah. All right, let's also round up the show taking a look at how some of these key assets are trading into that all-important PCE print. This is equity futures on your screen there. S&P futures seen opening up in the green, very close to all-time highs now. NASDAQ also seen erasing some of the losses we had yesterday after that pullback from NVIDIA. The Dow flat, but an all-time record high for the Dow, despite all of the negativity surrounding the U.S. economy. And then Euro Stoxx seen opening about 0.2% weaker. But that was our show for the day, for the week. Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. I will be back in a few minutes. This is Bloomberg.